Good morning, students. Today we are with the last part H of chapter 10, that is Securities and Exchange Board of India, SEBI. You could see the logo and the official setup, how it looks from outside. Now, SEBI's establishment, when we talk of, it was established as a supervising and regulatory body to curb certain malpractices and to promote the securities market in India. SEBI is managed by its members, which consists of A. Chairman, who is nominated by the Union Government of India. B. Two members, officers from Union Finance Ministry. One member from the Reserve Bank of India, and the remaining 5 are nominated by Union Government of India. Out of them, at least 3 shall be whole-time members. Now, Securities Exchange Board of India, as you could see, being abbreviated as SEBI, is the regulator of securities market, was established on 12th April 1992. For 1 mark question, this is important, through SEBI Act 1992. If we see the history of it, SEBI was officially established by the Government of India in year 1988 and given statutory powers in 1992, with SEBI Act 1992 being passed by Indian Parliament. SEBI has its headquarters at Business District of Bandra Kurla Complex in Mumbai and has northern, eastern, southern and western regional offices in New Delhi, Calcutta, Chennai and Ahmedabad respectively. Initially, your SEBI was a non-statutory body without any statutory power, that means. However, in the year 1995, SEBI was given additional statutory powers by the Government of India through an amendment to the Securities Exchange Board of India 1992. In April 1998, SEBI was constituted as a regulator of capital market in India under a resolution of Government of India. So this is just a brief of your SEBI. Now, reason why it was being established. Ask your grandparents, they would be telling you, those who are students of plus 2, about Harshad Mehta case, KP scandal case of bank. These were the cases, which was only because SEBI was not effective. So during 1980s, the capital market had witnessed a tremendous growth due to increase in the investors' population. Now this hike in the market capitalization led to various malpractices by the companies, brokers, merchant bankers, investment consultants, etc. All this led to huge losses to the ordinary investors, and they had lost their confidence in this segment. This made Government of India to constitute a regulatory body. So it was only to regain the lost hope of investors that SEBI was being constituted, and this is why we say SEBI is a watchdog. So the purpose and the role of SEBI could be classified under three major categories. First group is what you could see at the top, issuer or the company which is issuing securities, their safety, that they are putting it at right place. Then investors who are putting their money, their level of confidence. And finally, the intermediaries which are involved in the transaction. All the three needs to be safeguarded in terms of their vested interest in the market. So for this purpose, SEBI came into existence. Now, if we see SEBI's function, it is under three major headings rolled into one body. Now, those who would have been taking up EP entrepreneurship, they take it in a different way. They take it as quasi-legislative, quasi-executive, quasi-judicial. But from BST, CBSC point of view, we take it in the second way round. But both are justified. Both are justified. It's the same thing being put under two different containers, nothing else. So as per CBSE, we'll be taking up the second part, that is regulatory, protective and developmental. Let us see what regulatory function is. The way you see the regulator of a fan regulating the speed, regulator of the gas cylinder or gas regulating the flame, what are you doing? You are operating it at the best possible manner. So, if we see at least two fundamental things we have taken in the diagram part, your instruments which are being traded, they need to be regulated, and the intermediaries who are there, who have to be regulated, they both should be registered. They both should be registered. Now, if you further go for detailing, because here again, you can get 6-mark question as to what are the functions. So there we simply say 3 into 2, 6, 3 major headings and 2 points each, more than enough. So we'll take 2 basic in the diagram and then towards the points we'll be taking rest. So if we say 2 basic points for regulatory, registering instruments, registering brokers or intermediaries. Now let us see how it comes to point wise. First is registration of brokers and sub-brokers. Second, registration of investment schemes and mutual funds. Then regulates the functioning of share brokers and underwriters. Then regulating the takeovers bid by the companies. Further, conducting inquiries and audit of the stock exchange, levying fee and other charges as specified. Then only you can regulate. Fees has to come down for proper regulation. Children, developmental. Now, I have intentionally taken up protective towards the last because we'll be discussing certain malpractices there. So we are taking first developmental function. As you could see, who doesn't want to go for a upliftment or a development? So the same is here with the stock market. And here SEBI helps through various research, development, educational programs to upgrade. As you see, capital market reforms. So the first part is promoting investors, education and training of the intermediaries so that they can perform in an efficient manner. Then conduct of research and publication of useful informations so that people can use those data. Next, undertaking measures to develop capital market. Now next, as you could see, is protective functions of SEBI. Investors protection as a major, but still we see investor, SIP plans, brokerage firms, all are under the same umbrella. So we'll see how this protection works. First, by prohibiting of fraudulent and unfair trade practices like misleading statements, manipulations, price rigging, then controlling insider trading in securities to protect the interest of the individual investors, undertaking steps for protection and promotion of fair practices and code of conduct in the security market. Now what happens? We would be dealing separately on price rigging, insider trading, as your malpractices. Cornering is also there after this. So we are taking up now all the unfair trade practices that takes place or had taken place earlier, for that matter I should say. Let us see how it works. Now the one with the hammer that you see is where we call as insider trading. So the next. First, self-styled merchant bankers. Second, unofficial private placements. Third, price rigging is there in your syllabus under the box also. So that is why I have gone for a bit of more explanation. Here what happens, a false impression is given in the group and artificially you inflate the prices of certain shares of the company. And this is done by a group of people. Then unofficial premium on the new issue, non-adherence to the provisions of Companies Act, violation of rules and regulations of stock exchange and listing, insider. Now this is important. When the top officials of the company who can make bulk purchase or sale by making huge profit on the basis of vital information, such as declaration of dividend on future dates. So in insider trading, what happens? The information is leaked by trusted people of the company, like your directors and so on. Now this leaking of information leads to unexpected transaction in the market. At times it could be innocent, at times it could be intentional. It's like saying the husband who's the director of the company tells his wife that the company is going to get a big project and then the value of the share would go high. Now the wife speaks out this thing in the kitty party. People would trust. Wife of a MD cannot speak in air. So on the basis of her information which was given unintentionally, people started buying the shares in anticipation that the prices will increase. Reverse also takes place when the company is not doing well and you somehow discuss with your friends and the thing moves in the market. People start selling off. This is all for your stock exchange market from CBSE plus 2 point of view, children. It's a huge portion. Sky is the limit in this. I have only covered till your CBSE requirement. So please, in case of any further query, you are most welcome, but not on this platform. Not on this platform. There are many other aspects like red herring prospectus. If you are preparing for competition or you want to or intend to appear for interview as a teacher somewhere, we can always guide you on these topics, that how questions are being asked from a commerce teacher on these topics. So thank you very much. Stay tuned for the next chapter, that is marketing. But that after we are discussing with the questions. Thank you very much. May God bless you all.